It started in the 1980s, when Wall Street was booming, interest rates were wild, and life insurance was, honestly, boring. Until someone asked a dangerous question: what if life insurance could grow like the market, without the risk of losing money? And boom, IUL was born. Let's rewind to the early 80s. America was coming out of a recession, and interest rates were sky high, like double-digit high. People were stashing money into fixed universal life insurance, enjoying decent returns. But then something changed. Interest rates dropped, and suddenly those fixed policies weren't growing much. People wanted growth, but without the roller coaster of the stock market. Insurance companies knew they had to evolve. They needed something smarter, more modern. And that's when Universal Life got a twist. In 1997, the first official indexed universal life policy hit the market. It was revolutionary. Why? Because it combined permanent life insurance coverage, the flexibility of universal life, and the growth potential of stock market indexes, like the S&P 500. But here's the twist. Your money's not actually in the market. It's just linked to it. You get a portion of the upside, with a floor to protect your cash when the market crashes. It was a win-win: safety and growth. Wealthy clients, business owners, and savvy investors started taking notice. As more people got burned in the dot-com crash, they looked for alternatives. And guess what? IULs were quietly building cash, even when the market dropped. By the early 2000s, more carriers jumped in. Innovations came fast. Up Arrow, better indexing strategies Shield, more protection riders, $, more flexibility with loans and withdrawals. People weren't just using IULs for insurance anymore. They were using them to fund retirements, build tax-free income, and even finance businesses. It became a modern wealth-building tool. Then came 2008, the Great Recession. Markets tanked. Retirement accounts got crushed. But guess what IUL owners saw? 0% loss. Because of the floor built into these policies, many saw no loss at all while everyone else was bleeding red. That moment? It validated IULs. Now, financial advisors were really paying attention, and companies kept innovating, adding index options like the NASDAQ, global indexes, even volatility-controlled strategies to give people more control. Today's IUL is smarter than ever. It's not just for the ultra-wealthy. Teachers, nurses, small business owners, they're using IULs to build a tax-free retirement fund, a home or investment, protect their families while growing wealth. Modern IULs come with living benefits, critical illness protection, and powerful loan strategies that let you access your money while you're still alive. From a simple insurance idea in the 80s to a sophisticated wealth tool today, IULs have quietly become one of the most misunderstood yet powerful strategies out there. Now, the only question is, will you understand it before you need it? Follow for more clear, no-fluff breakdowns on how to build smart, tax-efficient wealth.